So what does it all mean for our market? Well, let's cross over to St George, where Simon Mariner is standing by with some thoughts on some of the numbers that we got out of the United States overnight, Simon, and some surprisingly strong retail sales data which put the market higher and pushed it higher. Do you think the market's got a little bit ahead of itself at this stage?
Yes, good morning. As you mentioned earlier, the US stock market snapping a four-day losing streak, probably on the back of some of that retail sales data we saw from a couple of organisations in particular. As mentioned again a little bit earlier, tending to be towards for those lower priced or more budget shoppers. We saw Costco Wholesale Corp. Also, they run a chain of stores around the US. Also, the well-known clothing brand Gap Inc. Both posting retail sales and numbers that were better than expected. Has the market overshot? Is it overdone? That's a really, really tricky one. There's a bit of a tussle, as you mentioned, going on there between the bulls and the bears. Remember, we did just have a four-day losing streak in the US stock markets. We haven't seen one of those since May, so there's been quite a while since we've seen one of those. So perhaps not so much overdone, but perhaps just a little bit of a correction there overnight.
So in terms of cues, do you think the markets, I mean, really it seems that economic data becomes the main game now. Earnings season in the United States is over, the summer holidays finish and you get traders coming back. And is this the challenge now, the economic data? It needs to really be showing some good readings.
Look, economic data certainly steering the market. Last night we saw the jobless claims figures come out of the US. Employment, a very, very important piece of economic data. Jobless claims fell just slightly, which was positive, although the numbers of jobless workers applying for longer-term benefits rose just slightly. In other data, we saw some, the service sector mending itself, highest levels of activity there since September last year, so that was positive. Another piece of that data, there's a section on insured unemployment rate. That's the percentage of jobless workers who are insured. Their jobless claims increased a little bit. I suppose most of it's sort of consistent a little bit with the view that perhaps employers remain a little bit nervous in the US. That some of the activity that we're seeing there is still, born of some of this policy stimulus we're seeing. And when I do say activity, we've got to remember and be mindful of the fact that what we're talking about is, when we talk about improvement there or positive data, we're actually just talking about the rate of attrition. So the deterioration in employment showing. We're not actually talking about job creation or job growth as yet. So we're still a long way from that. But as you mentioned, all eyes will be focusing on that all-important non-farm payroll figures, which does have the tendency to move the markets. We'll get to see them late tonight.
Yes, I mean, it almost feels like the investors are really confused right now. You look at gold and it's hit 6-month highs, and yet you see the Asian stock markets rally so much yesterday.
That's a really good point. I'd say that we're seeing a little bit of improvement in risk appetite overnight, and you tend to see that represented with people sort of chasing, higher yielding asset class like stocks and shares. Gold, certainly more of a flight to safety or a flight to quality. Tends to be a representation of risk aversion. Why are people buying gold? Gold is doing very well, as is pointed out. 6-month highs. Gold futures bumping around that big four-figure number, $1,000 an ounce. So generally people or investors chase gold when there's a little bit of economic uncertainty around the world, but also a big factor for the gold price is longer-term inflation rates. I think investors may be looking around and seeing that central banks around the world continue to prime their economies and pump liquidity into their economies, and down the track that's going to be certainly represented in perhaps a bit of an inflation problem. So a bit of a tussle going on perhaps between the shorter-term players and longer-term players, and all in all, I suppose it does make for a good market.
We don't have any economic data being released here in Australia today, so looking at the day ahead and maybe looking even beyond that, what's there to look out for? What are you watching?
Yeah, nothing much locally to steer the market. So, as I said, overnight, perhaps a little bit of a positive appetite towards risk. We're seeing the Aussie dollar up around 84 cents, which is generally a very good barometer for risk. So it's crept a little bit higher, the Aussie dollar. Aussie dollar itself, I think, for my mind, traders have probably got a pretty wide range there that they're looking at, with 80 on the downside and 85 on the top side. So the Aussie dollar has been a little bit of range bound, and again, that could be a little bit of that indecisiveness in the market there. For my mind, 85 is probably going to be tested earlier. I see a lot of good reasons for the Aussie dollar to go higher. Interest rates slightly higher this morning, looking perhaps for those to trend or creep just a little bit higher over the course of the day if this risk appetite remains. As I said, no data today for us, but tonight some big stuff coming out of the US. We've got the non-farm payroll figures, as we keep mentioning, and we'll hear all throughout the day, very important. Also some Fed speak. We hear from the Fed from Fisher. Also in London, G20 finance ministers are going to speak, so there's going to be a lot to digest over the weekend. And as you mentioned, a long weekend for those lucky people over there as well. So not much to steer the markets perhaps until Tuesday. Although Monday here, I think we do get ANZ job ads. So that might be helpful for us here domestically.
You give us some great analysis there. Thank you very much, Simon, for your time.
You're welcome.
Simon there from St George. Now,